Hey folks, welcome to Verified Investing Alerts. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. We're going to get into some action, but just a reminder, my service at InTheMoneyStocks.com is called Verified Investing Alerts. It's a swing trading service where I give out live trades as I take them, and obviously I give exact entries and exits, stops and targets. In addition, I do nightly videos that are usually about 20 minutes in depth, talking about price pattern and time, technical analysis, in-depth analysis on the markets, on trades, and everything else you could possibly want to know about the markets. There's also a live broadcast each week that you can come and ask me questions on any chart you want. You see my charts, you hear me over your microphone, and you can type questions to me. All right, let's get into the action today, folks. S&P is lower by about half or just over 0.5%, but notice the technicals here. So we opened just slightly higher. We went up to this trend line, which notice yesterday, pivot. So that was going to be resistance, and the market hit it perfectly and backed off. We then fell down here. We filled a gap, small bounce, and then rolled over more sharply. Now, this rollover is expected. As I explained a couple days ago, I said that yesterday was a intra-cycle pivot point, meaning that the market should turn down. So far, 2 days in a row, it has done that, although I do want to see more downside in the coming days to conclude the intra-cycle pivot. All right, and by the way, these cycle dates, this is what I give in my service as well at Verified Investing Alerts at InTheMoneyStocks.com. Now, notice the low of the day. This is awesome, folks. This is technicals to a T. What I mean by that is the low of the day hit the 200 moving average, and look at the high pivot right here. In addition, there's a gap fill right there that you kissed. So there was so much support here that any common sense technical trader would have expected the markets to bounce, as I did. Now, I don't think it holds for that long, though. I mean, maybe in the light volume today, which we do have, by the way, it can hold for the entire day, but I think it's a ticking time bomb for further downside. This is actually forming a bearish pattern here. This is a bear in spirit of bear flag, and likely, again, I think you see further downside. I don't know if it happens today or tomorrow, but again, this is on borrowed time. The only issue with today, whether it happens today or tomorrow for me, is based on the volume. So here we are, I'm doing this video at 1:30, approximately 1:30 p.m. Eastern time, and we've only done 27.5 million shares on the spider. So the volume is insanely light, and on a technical basis, if you know about trading, you know that in light volume, the markets have a harder time falling. All right. Generally, there's a neutral to upside bias. So today's a very light volume day. The markets are still seeing downside, but the question is how much more downside can they get unless volume picks up. Now, there are some stocks I wanted to touch base on that I thought were very intriguing. Number one, you have to look at Netflix. This is the Netflix daily chart. Look at this bearish reversal today on Netflix. Classic double top. Here's your former pivot high. Here's the high today, and look at the reversal. I mean, this stock is now down about $30 off of the highs of the day. To me, as a technician, that, gets my attention because they report earnings next week, and obviously at double top, some major sellers came out of the woodwork. If you look at the volume candle down here, it's bigger volume already than yesterday. So that tells you that small investors aren't the ones selling here. These are bigger investors and traders that are unloading Netflix. So who knows what it does into earnings? Who knows where it goes on earnings next week? But certainly a bearish reversal on Netflix. Another stock that I'm paying particularly close attention to is Peloton. Peloton has had an amazing, miraculous move up during this pandemic. But again, as I've said for the last couple weeks, is once you get a vaccine to be approved, likely in November, December, then the stock is going to have major downside. I think even on anticipation of that, you are likely getting to the stratosphere here where you're going to see a reversal. What's interesting about today's price action is the volume is big, so already bigger than yesterday, approaching basically the last couple days of volume. So you'll do more volume than the last week basically in total. But look at the reversal today. This is what we would call a topping tail and a reversal candle. When you get a topping tail on a chart, when it's this extended, and you could look at the RSI, the MACD, I mean, all of these metrics are ridiculously extended. But when you get a reversal like this or a topping tail at these all-time highs, the power of it can cause a mass exodus in the stock and a big substantial reversal. So for me, I expect this stock to come in, and it'll take weeks, but ultimately I do think that you head down here. This is a big level right down here, and this is all the way down just below the even number of 100. So basically we're talking about a $30 sell-off in Peloton that my guess is will happen over basically into the year end, maybe even sooner than that, depending on the market action. But I think in the very least by year end, you are back to the sub $100 level on Peloton. So very interesting to kind of note here. Talking about a few other stocks, I am looking at stocks like Amazon, which have had an insane run-up. To me, the Amazon run-up over the last couple days was somewhat faulty. And the reason I say that is, and this happened with Apple as well, Apple ran up as well as Amazon on the back of going into these big events, right? So Prime Day yesterday and today, it ends today. Apple unveiled its iPhone 12, the 5G version, yesterday. Apple sold off yesterday after that unveiling pretty nicely. It's down about 75 cents today. But you can see as Prime Day is coming to a close, this stock is coming back in. The one thing I point out here is that common sense dictates that we all knew Prime Day was coming a month ago, 2 months ago. We all knew the date of Prime Day, right? So big investors were already situated. The run up the last couple days was probably a lot of smaller traders jumping in. They're not the type of traders to hold long term, right? So you're already seeing this trade unwind to the point where you're back to what we call gap window right here. And my guess is it easily gets back to here over the next day or two, which is gap fill. Now, after that, that's going to be the question mark. Can it stabilize there, or is it going to continue lower? I ultimately think Amazon still has further downside. You can see why it stopped down here when it had the corrective move that we had recently, because support and support. But I do think that a lot of these technology stocks, it's not being priced in yet, but regulation is coming. And the reason I say that is because, you know, it's clear, who knows if the Senate fully goes Democratic, but they're definitely going to pick up some seats, which is going to just make it more likely that regulation is going to come. So you're going to get regulation, you're going to get hearings on Capitol Hill, and you know, over the last couple of years, there's been a lot of talk of regulation, and they've called these CEOs, Amazon CEO Bezos, and some of these other players to Capitol Hill, Mark Zuckerberg, for instance, but nothing's come of it because you haven't had enough Republicans or enough Democrats actually to be able to control the votes. But that is going to come, and that's going to put pressure on these big stocks. And it's one of the reasons why, even though I think there's a lot of stimulus that'll happen if the Democrats take the House and the Senate, I also think that the big technology stocks could be under pressure even so, which can also mitigate any upside on the market, right? Because let's be honest, Amazon, Google, Apple, Microsoft, and Facebook are basically 25 to 30% of the NASDAQ 100, and a huge percent of the S&P. So again, keep that in mind. I mean, when you have the weightings of those stocks like that, it's very hard for the market to get out of the way if those stocks are under pressure. All right, so that's what I kind of wanted to go over here, but again, we'll continue to follow suit. Taking a look at the spiders here, you can see the spiders continue to make that intraday bearish pattern. Watch again, lots of support here and here, the gap fill. If you get through this gap fill on the spiders, guess where your next stop is? You'll have a little support right here, and then ultimately this gap fill right down here is your next support. So interestingly enough, being options X, it looks like they got a lot of small investors to buy this rally up on Monday in terms of calls, and now the institutions which control the options game are bringing it all back in, kind of taking that money off the table in terms of premium. And again, you can see the spiders down ticking, but again, until we break, I'm not going to buy it because the volume is just so light in today's action, in today's market. All right, bottom line is, come to inthemoneystocks.com. If you come and see my page, Verified Investing Alerts at inthemoneystocks.com, you can find it under my name, by the way, Gareth Soloway. You can see my verified track record for both my swing trade service as well as my options service. I encourage you to come check it out. Come profit with me. Again, I'm putting out trades almost every single day. Lots of action to be had in this market and lots of profits to be had as well. Take care.